Well, welcome everyone. Cynthia Tomaine here with Interactive Brokers, and thank you for joining us for a very exciting presentation today. We are very pleased to have Tyler Winklevoss, CEO of Gemini Trust Capital, and Cameron Winklevoss, President of Gemini Trust. Now, I do want to thank you both for joining us today. Now, Tyler is also the Chief Executive Officer of Winklevoss Capital, a private investment firm he co-founded with Cameron, who also serves as the Chief Operating Officer of Winklevoss Capital. Also, prior to the formation of Winklevoss Capital, both presenters today participated or were members of the U.S. men's national rowing team and actively pursued early-stage investment opportunities. Also want to let you know that both Winklevoss began participating in the digital asset space through direct investment in Bitcoin in 2012. Plus, just as a side note, with the Winter Olympics going on, did want to mention that both Cameron and Tyler Winklevoss represented the U.S. in the 2008 Olympic Games in Beijing, China. So with that, I am very pleased to introduce to both of you Tyler Winklevoss and Cameron Winklevoss for today's presentation. So let me put this over to make you the presenters. Let's get onto your slides and we'll get underway here today. Thanks for joining us, everyone.
Great. Thank you for having us. We're excited to share some information about Gemini. I'm Cameron. I'm one of the co-founders of Gemini, along with my brother Tyler. We started Gemini. We actually started investing in the digital asset space with Bitcoin in 2012, when Bitcoin was about $8 or $10 a token. And at that time, it was a pretty risky venture trying to purchase Bitcoin. We actually did a lot of our purchases on an unregulated exchange overseas that did not have any FDIC insurance or regulatory oversight. That exchange is actually called Mt. Gox, which some of you may know famously imploded and taking hundreds of millions of dollars of customer funds with it. Luckily, we were not injured in that. We had since, moved on and not transacted with that exchange, but it was a big eye-opener, the experience. And once we bought Bitcoin, we then had to figure out how to store Bitcoin. And we proceeded to take our private keys controlling our Bitcoin and write that on pieces of paper, cut it into several different pieces, and then spread it out among secure vault locations across the country. So we probably lived on planes for about the better part of a week and had to manage all of this security overhead with storing our Bitcoin after acquiring it. And so that was great for us, but we realized that most people in their right mind are not going to go through the same process. It's risky, takes a lot of know-how and a lot of motivation to do it that way and actually acquire Bitcoin in that manner. So we started to think of ways in which we could create infrastructure to allow people to do the simple act of buy, sell, and store Bitcoin in a regulated manner, similar to how you might store a commodity with a custodian or your dollars with a U.S. bank or any financial institution. So starting in 2014, we began to look at creating a digital asset exchange and custodian. And during that time period, the superintendent of New York, Benjamin Losky, superintendent of the New York Department of Financial Services, started to look into Bitcoin, which was the majority of sort of market cap in digital assets at that time, and started to build a new regulatory framework or think about how to regulate the technology. And then we actively participated in the public Bitcoin hearings in January of 2014. It was, I think, broadcast live around the world, and there was maybe 100 different countries of people tuning in to sort of watch these hearings take place. And we opened an active dialogue with the department and said, hey, look, we want to build infrastructure that's regulated, kind of an on and off ramp into this world, and take what is kind of an island of technology and innovation and build a bridge to the mainland of finance in a regulated fashion so that people can interact with this new technology in a safe manner. So that was the sort of the creation story of how we got to where we are today.
And if people can tell the difference between voices, this is Tyler. I am the CEO of Gemini Trust Company. Cameron is the president, and I like to joke that I won the coin flip to be the CEO. But I think Cameron did a really good job of basically explaining how did we get here, why did we start Gemini, what was the problem that we were solving. The problem we had 5 years ago was it was really difficult to buy Bitcoin. There was a lot of friction. You had to go offshore with your money. And then when you got it, there wasn't a really easy way to store it. So we identified this problem in the Bitcoin ecosystem. We love the technology. And in order to help bring other people into the technology and onboard people into Bitcoin, we would have to build something that was a licensed bridge or gateway that connected the island of Bitcoin and this great technology with the mainland of finance. So with that, we'll sort of get into, that's how we got here, and sort of we'll get into what exactly Gemini is.
So this is just legal disclaimer on regards to Gemini, digital assets, and this space. Keep moving. Risk factors, and you can all review that later when you download the presentation. So here we are with Gemini. So today, Gemini is a licensed digital asset exchange and custodian. We allow customers to buy, sell, and store both Bitcoin and Ether in a regulated and secure manner. As just mentioned before, we started this project in 2014. We engaged with the New York Department of Financial Services and proceeded to apply for a trust company license.
So today we're over 80 professionals in New York. We're growing quite rapidly, but it's hard to believe. But only a few years ago, we were just a few engineers in a room, and starting to build this great company.
So we launched in October of 2015 once we achieved our trust company license. And that license took us actually close to 2 years to achieve. And simultaneously, while we were pursuing that license, we also assembled a team of technologists to build the technology platform, the exchange, and the custody piece of our business. So we parallel processed those and launched in 2015. We are currently open in most states in the United States, Canada, the UK, South Korea, Hong Kong, Singapore, the Cayman Islands, and the British Virgin Islands, Bermuda, and the Channel Islands. So we have a global presence. We are allowed to accept customers around the US and around the world. And so we will jump to the next slide. So we are a trust company, and I think it's important to note that this is one of the oldest regulatory banking frameworks that exists. Other notable companies that have been around for a long time that are large custodians and banks that you may be familiar with, such as Bank of New York or State Street, were at one point trust companies or absorbed various forms of trust companies. So those companies, I think, are nearing 225 years old, so they have a little bit of a head start on Gemini. We are nearing 3 years old, but we use a similar framework that relates to New York banking law, And we're really excited about marrying sort of one of the oldest compliance and regulatory frameworks with one of the newest technologies in finance. So that marriage has been kind of one of the more exciting opportunities that we've been working on, because in one side of our house, we're sort of a regulated bank-like, depository institution. On the other side, we are a technology company. So we sort of joke we wear suits, half the time on Mondays, and we wear hoodies on Tuesdays and alternate. We have a bit of a split personality. So we are authorized under the New York banking law to act as a custodian of digital assets, and we have oversight into that piece of the business. And that's very important because digital assets that's sort of the key. Because we are a full reserve exchange, we take deposit of digital assets before they trade, and dollars that are deposited to buy Bitcoin or Ether are sent to our partner bank, and they custody fiat dollars, but we custody digital assets. And that's important to note because securing digital assets is an important and difficult problem that we have solved. And we have oversight onto that piece of the business. If digital assets, if you lose the private key, you lose control. So as an exchange, we focus a lot on the security component.
So I think this slide is very interesting because it kind of shows how unique in a way a digital asset platform exchange like Gemini is in compared to traditional markets. So in traditional markets, you have the broker functionality, the exchange, clearinghouse, and custodian actually split out into 4 different parts. And so if you place an order, let's say to trade Bitcoin futures through Interactive Brokers, it would you'd place it with them. It would go out to the exchange, the central limit order book of the CBOE Futures Exchange, clear by the OCC, and then maybe some custodian like a State Street might custody some assets at some point. With Gemini, all of those 4 functions are collapsed into one. So when, we sort of use the moniker, people say, a digital asset exchange or Bitcoin exchange, but it's really, the word exchange is sort of a misnomer, or it doesn't explain the full story. As Cameron mentioned, you go to Gemini.com and you can either, with the user interface, submit an order with your mouse, or use an API connection and API keys to place an order with Gemini. It goes to the exchange matching engine that we run in the central limit order book. If it matches with another order, a trade executes. We clear it. We adjust our internal ledger, and we also are, taking custody of your Bitcoin, Ether, and any other digital assets. So the only piece of the puzzle that we don't have a part of is we don't hold fiat currency. That goes into that is the banks that bank us do that. But I think this emphasizes the unique nature of a digital asset exchange and custodian versus what you're used to seeing in a derivatives or equities market, and also the big importance of regulatory oversight. If you do business with an exchange, a digital asset exchange that has no regulatory oversight, all of those 4 pieces, no one's watching that there's compliance, that there's licensing, that there's the proper internal controls and procedures. And for us, we sort of joke that we have our audit season starts on January 1st and it finishes on December 31st. We have a Bank Secrecy Act, AML, anti-money laundering internal tests done by one of the big 4s every year. We have security penetration tests done on our application layer, on our data center. We have to submit year-end financial audits that are audited by an accounting firm that's licensed. We have to submit quarterly financial statements to our regulator and semi-annual call reports, similar to what banks have to submit, and those are FFIEC call reports. Our regulator is the New York Department of Financial Services. It is the the regulator of all banks and insurance companies in the state of New York. And every year they perform a month-long safety and soundness exam where approximately 5 examiners sit in our offices, go through our run books, and make sure our compliance function or other functions are doing what they're intended to do and what we're saying they're doing. And in addition to how we're our cybersecurity in technology. So we are very passionate about regulatory oversight because we think that makes a better experience. It's what allows us to build a relationship with SIBO, and it allows people to come into this great new world of digital assets in a safe, secure, and compliant way. So this is, we'll talk a little bit about Bitcoin and the network. Just a little history. Bitcoin was launched. The first white paper was written in 2008. So we're almost going on 10 years. It's gone fast, and there's still a lot to go. But launched by pseudonymous programmer Satoshi Nakamoto. It may be a person, a group of people, but the beauty is you don't actually need to know who created Bitcoin because everybody can see the source code. And the clients are downloaded and people can develop. And it's an open source project that is a living, breathing organism that continues to evolve.
And the key breakthrough that happened in 2008, 2009 was creating a decentralized network that did not require a financial intermediary where two parties could transact securely with one another. And previously, it was not believed that you could build consensus with respect to whether a transaction was valid or not. Among a decentralized network, you would always need some kind of central authority like Visa or the Federal Reserve, basically looking at transactions and saying whether they were valid or not. And Satoshi created a system where all of a sudden you could create consensus through the mining mechanism on transactions and allow people to transact on, as I mentioned, a decentralized, open, permissionless network with an immutable ledger.
So Bitcoin has a lot of characteristics that are similar to gold. When you look at the money characteristics of what makes gold interesting or exciting or valuable to individuals, it's got scarcity, fungibility, durability, divisibility. Bitcoin was created by engineers who basically looked at the characteristics of gold and tried to re-engineer them in a way. And we sort of joke that Bitcoin is better at being gold than gold, or it's gold 2.0, because Bitcoin's actually fixed at 21 million. There will never be more than 21 million Bitcoin in circulation. And you might say, oh, well, is that enough to go around? Well, each Bitcoin can be divided into 100 million pieces. So they're infinitely divisible. So Bitcoin's actually fixed, whereas gold is scarce. Bitcoin is more portable than gold because you can send Bitcoin around like an email. Bitcoin was engineered by the same people that created the same type of engineers that created the internet itself. So it's the first money that was really built for the internet, and it's a protocol. And so you can send Bitcoin like you can send an email. And I think that, interestingly, when we first came across Bitcoin, the aha moment for us was that we were actually in Europe, and we had to get money over to pay for accommodation. And if you, the joke in cryptocurrency is if you want to get money from New York to London on a Friday afternoon, your best bet is to go to John F. Kennedy Airport, jump on a plane with a bag of cash, and you'll get there in the morning and the money will get there. But if you try and wire it through FedWire, SWIFT, or any other type of transaction like that using the banking system, it will take, it might get there Monday if there's a bank holiday Tuesday. So imagine if our email worked on the same hours as as the banking system. Now, we sort of joke that we might actually like that, because I wish my email shutdown was only open from 9 to 5 and was closed on weekends. But I think the point still remains is that Bitcoin and cryptocurrencies like it are the first money that was actually built for the internet and operates the way our email does. And so it's got these amazing characteristics. Bitcoin's fungible, it's divisible, it's fixed, and it works the way money should work in the information age. So this is just a slide on basically how a Bitcoin transaction works. And the idea is that you, with your Bitcoin private key, it's like your password to your email in a way, you sign a message to the network basically saying to make a change in the universal ledger, which is known as the blockchain, which every member of the Bitcoin network has a copy of. And through cryptography, when I say, now make my Bitcoin associated with a different Bitcoin address, basically send it to Cameron, I'm basically signing a message with a private key that is able to be verified by the entire network so that they can update the ledger without me having to disclose my private key. And that's the magic of cryptography. And the other piece of magic here that happens with Bitcoin is that the miners make sure that I don't send my Bitcoin twice. So it's called the double spend problem. When I take a $20 bill out of my back pocket and hand it over to Cameron, for instance, or someone on this phone, I can't turn around and take that $20 bill and then hand it to someone else because it's left my hand and it's gone. When you email someone a picture, because data is very cheap and it's easy to copy, you're not actually sending the person a picture. You're sending them a copy of the picture that stays on your phone or your computer. So with Bitcoin, how do we create this digital scarcity when we know how easy it is to counterfeit and copy ones and zeros? The miners perform this function of mining, and by putting computational resources towards the mining problem and trying to solve that, they ensure that you can't spend or don't spend your Bitcoin twice. They solve the double spend problem, and they're paid a reward every 10 minutes of Bitcoin for putting those resources and providing that service to the network, sort of like a referee or the auditor of the blockchain. And that's how you create the digital scarcity of Bitcoin, the 21 million supply, and that's what the function of mining does. Here's a little interesting history lesson. I won't bore you all by reading through it, but I'll just sort of highlight the interesting points. A lot of people don't realize that the legal precedent for Bitcoin has been happening, at least in the U.S., for many years, and it's pretty well understood. In 2013, FinCEN, which is an arm of the Financial Crimes Enforcement Network, which is an arm of the U.S. Treasury that deals with anti-money laundering and Bank Secrecy Act type issues, issued guidance in 2013 that is still state enforced. Gemini follows that guidance. Gemini reports to FinCEN currency transaction reports and other suspicious activity reports and other reporting requirements in line with the Bank Secrecy Act and the Patriot Act. So that's pretty well understood. In 2014, the IRS published guidance on how people should classify, or how Bitcoin should be classified on tax returns. This is obviously not tax advice that I'm giving you, but the interpretation by many is that, and you should check with your own tax advisor, is that if you hold Bitcoin for a long enough period of time, it is eligible for long-term capital gains. So if you hold Bitcoin for a year, similar to if you hold a security like Apple for a year, it's eligible for long-term capital income tax. So it's treated like real property. That's very different than a currency, which is never eligible for long-term capital gains, which is sort of confusing because a lot of people refer to Bitcoin as a digital currency, but it's actually another box on this slide is the CFTC ruled that Bitcoin is actually a commodity, an exempt commodity, under this Commodities and Exchange Act, similar to gold. So Bitcoin is classified by the CFTC in the same category as gold, as a commodity, which is good because it makes it, that lines up with the IRS's guidance on its tax treatment. And so those are some interesting highlights from the U.S. on a regulatory standpoint. Another fun fact here is that since Bitcoin, other cryptocurrencies have arisen, namely Ethereum, which is mentioned here by a founder of Vitalik Buterin, and most recently Japan has come down very favorably with licensing and regulatory framework for digital assets in Japan.
And then the other major development, of course, we want to highlight on this slide is that in December, Gemini, working in partnership with CBOE Futures Exchange, launched the first ever U.S. dollar Bitcoin futures contract. So we think this is a great development to increase, obviously, price discovery, to create a regulated product, derivatives product on top of Bitcoin. It was the first instance of the beginnings of a truly two-sided market, because participants can start to go short, both short and long, on Bitcoin. And because it's cash settled, people can trade with dollars, and there's no need to actually even touch the underlying if people are unwilling or not ready to transact in that. And so we thought that this is obviously was a groundbreaking moment for Bitcoin. It's sort of the next logical step of the progress of this market, and clearly continues to create precedent in the CFTC on how Bitcoin is treated as a commodity, and building products on top of that are regulated and continue to increase participation in the ecosystem. Now, I think I'll just quickly make a mention that there's been a lot of discussion about ICOs, initial coin offerings, which are really token securities, and it's important to note that those are distinct and different from commodity tokens like Bitcoin, like Ethereum, which are treated as commodities under the Commodity Exchange Act, or the CEA. Unfortunately, a lot of times Bitcoin and Ether get sort of swept up in the whole ICO discussion, and they really are completely different assets than securities that are tokenized. And I think it's important to separate those two. Gemini only deals with and transacts with commodity tokens. We are not a securities exchange, and we do not allow the tradings of security, and that's not our focus. Our focus is on these layer one protocols that have tokens that are commodities that are solving for problems and creating value systems for them. So the next slide is simply just a history of the Bitcoin price. Obviously, if anybody, I'm sure everybody on this call is very familiar with the fact that Bitcoin has had a pretty tremendous year. The past year of 2017 saw a tremendous increase in adoption and interest, not just interest because there's been a lot of interest in Bitcoin in general and digital assets for a while, but also people beginning to express viewpoints and entering into the purchasing the currency. And quite frankly, the trend has kind of been, even if you back out and you look at 2016, over the history of Bitcoin, the trend has sort of been upwards. Though, of course, we've recently seen a cooling off in the market and a retracing of prices. So let's shift a little bit to Gemini and the services that we provide. So we have been hard at work trying to build institutional grade technology and infrastructure, both from the exchange standpoint as well as the custodial nature. And so while we have customers of all different types, from individuals to funds and professional investors, as well as prop trading shops and market makers and liquidity providers, we definitely have taken more of a approach towards building towards the institutional grade and trying to link up digital assets with the sort of mainland or traditional financial system. One thing that we actually don't have a mobile app yet. We've been really focused on things like the futures contract, building our auction, building into our own co-located data center. So those have been kind of how we've decided to prioritize our development roadmap. I think we will get a mobile app sometime this year. We're probably one of the few companies in 2018 that have been, our startups that don't actually have one, but it just kind of gives you an idea of the way we're thinking about our priorities as a business and the kinds of things that we're focused on building. I think I mentioned earlier that all U.S. dollars held at our banks are FDIC insured. We take custody of your digital assets, the majority of which are stored offline in our cold storage on computers that are not connected to the internet as added security. And then we, of course, have to adhere to all anti-money laundering, AML, and Know Your Customer requirements, KYC, and everything basically as mandated, consumer protections as mandated by the Bank Secrecy Act. We follow these, so we follow the same laws and federal rules and regulations as any bank, and do all the reporting requirements and stuff associated with that. So we think that we are a very compliant outfit. And then let's talk a little bit about the Gemini marketplace. We offer central limit order books for 3 different asset trading pairs: Bitcoin US dollar, Ethereum US dollar, and then Bitcoin Ether, so digital asset to digital asset trading. We have market and limit order types, and then several different twists on the execution options for our order types. We have a marketplace page on Gemini.com/marketplace where you can get more detailed information on this. So if you care to dig in deeper. We also do daily auctions in Bitcoin and Ether that go throughout the week, even on weekdays, weekends, and holidays. And this auction is used to settle the CBOE Bitcoin futures contract. We have gone through 2 settlements now. The last was on February 14th, Valentine's Day. And the settlements have been successful and orderly. And we feel like the futures product, is continuing to sort of prove itself as a great mechanism that is settled to the Gemini auction, which is a single tradable price, and we'll get into that a little bit more. The last thing I want to highlight on this slide is the connectivity options that we offer at Gemini. We have REST and WebSockets API connectivity, but we also offer fix via Cross Connect from Equinix NY4 and 5 data centers. We have our own data center in Equinix, so you can run a Cross Connect to Gemini, similar to how you would to any other securities exchange venue or FX venue or futures venue. We, I think, are the only digital asset exchange in the world that offers this type of connectivity. We are not on the cloud. We used to be up on Amazon and in the cloud, but we have been building towards a future market that we believe will resemble the maturity of all of the other major markets around the world. If you have further questions, you can, of course, email connectivity@gemini.com. So here's a little bit discussion about our auction equilibrium. Some of you may be familiar with opening and closing auctions in the equities market. And our auction functions similar to that. We basically set an auction at 4 o'clock every day. We run an auction, and we start broadcasting indicative auction prices starting 10 minutes before the auction at 3:50 p.m., where we broadcast the indicative price and quantity. And then at 4 p.m., the auction runs, and the price of the auction is set at the point at which the greatest amount of demand, buy and sell cross each other, and that sets the price and then the quantity of the auction. And we do this, we also collar the auction with an index, and if the auction were to fall more than 5% outside of the index, it will fail. But generally, it lines up with that with that index. And of course, the first two settlements of the CBOE futures contract, as I mentioned, were well within the actual caller of our auction. And we believe that this auction, what's important is that it's a single tradable point of elevated liquidity and price discovery in the market. And so anybody sort of looking to trade the futures contract understands that it is settling to a tradable price, which is the 4 p.m. Gemini auction. And anybody looking to arbitrage between the underlying auction price and the futures price can do so because it's a tradable price. It is not, the futures contract with CBOE does not settle to an index. And it's important to note, because Bitcoin exchanges are all full reserve, to potentially trade an index or trade around that, you would need to leave assets on multiple different exchanges which have varying levels of connectivity and varying levels of oversight and licensing. And so we think what's so one of the strong points of our contract, futures contract with CBOE, is A, our regulatory oversight, B, our connectivity options, and C, that is a tradable price and very easily understood by market participants around the world. So these are the digital asset exchanges, the notional trade volume on Gemini across our different order books, as well as bid-ask spread. Obviously, volume has only been increasing as we've grown as a company, and of course, the space continues to mature. So we, of course, love looking at this slide. It's always exciting to see an increase in participation, and I think tight spreads. Even though we're not the most mature market, I think our spreads are actually pretty competitive and impressive for where the market is today.
And we're very excited and encouraged, because we sort of feel like this might be, to use a baseball analogy, it might be the bottom of the first inning in terms of cryptocurrency. Yes, Bitcoin has been around for almost just over 9 years, but the growth and that we've seen has been super exciting in the year of 2017. But we feel, and we get to see the new different type of customers that are onboarding. Obviously, the advent of the CBOE futures contract is a big step forward, but it's still really early. Firms are still coming in to clear it. There's still like high margining and position limits, and in very much there's so much more to go. And then other financial products potentially beyond just a futures contract, but options, ETFs, ETNs, things like that. And that's Bitcoin, alone. And it's still super early. So, yes, 2017 was a really exciting year, but all signs from our standpoint point to 2018 and beyond being actually potentially even more exciting. So just to kind of circle back to the custody service aspect, being a New York trust company, similar to how State Street, Bank of New York, and many other large custodians started as trust companies, we think is really critical to who we are and what service we provide. And because we're a New York trust company, we are a fiduciary under Section 100 of the New York banking law, which is obviously an important distinction. We have high cybersecurity requirements and compliance standards that any New York trust company would have. So we offer two custody services. Generally, a typical Gemini account is a depository account whereby your assets are held in a pooled omnibus account. There's no fees, no minimum balances or anything associated with that, and those assets are ready for trading immediately. So that's obviously attractive for a number of participants for reasons mentioned, no fees, and of course readily tradable and easily or to withdraw
out of the exchange. Then we also offer a segregated custody account solution. This does come at a cost, but it is important for a lot of participants who have a legal requirement actually to store assets in segregated digital asset addresses in what is known as a bailment type relationship, and so that their assets are not permitted to be pooled or commingled. They have a legal requirement to be segregated. A lot of funds have this requirement, and some people just prefer it. They believe that for a variety of reasons, and these assets, because you have a sort of your own segregated digital asset address, they're readily verifiable and auditable on its respective blockchain. So and of course, the segregated custody solution is 100% in cold storage, whereas the depository account is majority in cold storage, but obviously a portion of those funds are held in hot internet-connected computers to effectuate immediate settlement of transactions or withdrawals. So that, I think, pretty much brings us to the end of the slide presentation. If you have any questions involving opening up an institutional account, please contact bizdev, that's with a Z, BIZDEV, at Gemini.com, and we look forward to working with you to get you set up with Gemini, both from an account standpoint and also answer any connectivity questions.
Yeah, and if you just wanted to open up a retail personal account, you can just simply go to Gemini.com and do that there.
All right. We've gotten a lot more questions than the guys are going to be able to answer, so we've consolidated them into a couple of questions. But the first person to send in a question was Stan. He's been using Gemini for 4 months, and he's extremely pleased. And so you got an endorsement from Stan.
Great.
All right.
Thank you, Stan.
We got a lot of different specific questions about geographic expansion outside the U.S. Can you guys speak to that?
Yeah, there was a slide earlier. So we are accepting customers in Canada, the UK, South Korea, Hong Kong, Singapore, and British Virgin Islands, Cayman Islands. I'm probably missing a few, but obviously, pretty much all 50 states. We're always looking to expand, broaden our area of operations, but we're also really focused on continuing to drill deep with digital assets. So Gemini currently trades Bitcoin and Ether. We'd like to offer additional digital assets and cryptocurrencies that fall into the commodity-like category. We'd also like to include more fiat pairings with that menu of digital assets, but continue to also build deeper into, a specific digital asset. So like with Bitcoin, doing the building the relationship with SIBO, building a futures contract, and just kind of continuing to build the financial instrument and ecosystem around digital assets as well.
Okay. And then right now you offer Bitcoin and Ether or Ethereum. Any plans to expand beyond those two?
So I think we answered a little bit in the last answer, but absolutely. We believe that, one of the things when we first started, we were a Bitcoin exchange, but we actually, if you read most of the Gemini website, we use the term digital asset because we fully believe that there is going to be a number of really important digital assets to come out over the coming years. And so we are very much a platform. We are sort of agnostic to the actual asset trading. Of course, we're only focused on assets that look to have a viable use case and community behind it and are good for our customers. We're not going to focus on assets that we don't believe are real. And so I think, as Tyler mentioned, over the course of this coming year, we fully intend to expand and add more digital assets and potentially also other fiat currencies in addition to the US dollar.
Right. So Bitcoin is sort of a store of value digital asset. Ether is sort of like a compute digital asset. There's other pieces of the grid, like storage and whatnot, that will have their own blockchain digital assets that have blockchains. And we see a future with much more than just Bitcoin and Ether.
Well, there have been a lot more questions, but we're bumping up against time, so we're going to hand things off to Cynthia. But one other comment, right after Stan mentioned how much he liked the platform, we probably got 50 more comments along the same lines. So we're getting non-paid for endorsements via the question line.
It's great. We love, this is so great to hear this positive feedback. We couldn't be more excited to be talking to this sophisticated group of investors. So thank you for your time and interest both in Gemini and hearing what we have to say, and also potentially interest in the futures contract, which I'm sure you are aware you can trade at Interactive Brokers. But we couldn't be more thrilled to be having these types of conversations with folks like yourself. It's the future that we have always envisioned starting 4 or 5 years ago, sort of being on a conference call like this, talking to people like yourselves. This is what we sort of get up every morning in the day for. This is what we live for and what we've been building for. And it's just super exciting and great to see it happening. So we thank you for your interest in both Gemini and also digital assets in general. We truly believe that it is the future of finance and technology in so many ways, and offers a promise that like no other technology. So thank you very much.
All right, Cynthia, it's all you on the housekeeping.
Okay, well, thank you. I want to express a great deal of thanks to both Cameron and Tyler Winklevoss for today's presentation, and to remind each of you that we have been recording today's event, and you'll all get a direct link soon after today's webinar ends. So if you do want to come back and review those concepts discussed today, simply watch your inbox for not only the direct link to the playback, but also a link to the slides. Now, for those of you who may be watching this as a recording, I do want to let you know that both the recorded playback and the slides will also be listed on the Interactive Broker website. Underneath the education menu, you'll find a webinar section where you can find today's event will be listed. So with that, we are going to conclude our event today. I'd also like to thank SIBO, the SIBO offices, and Russell Rhodes for helping out in Chicago today. Now, with that, we are going to end today's presentation. So thanks all of you for joining. Have a great rest of your day all. Thank you.